Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, September the 2nd. The year's 2025. Let's talk trading. Right versus profitable. These videos are for educational purposes only. Your results may differ from mine. As always, as we starting off this month of September, let's make sure we have risk management in place so we never lose more than we're willing to lose on any one single trade or during any one trading session. So, right versus profitable. I think I've had a video or two about this, and I believe Walmart and I have talked about this during a video before, but it's one of those things that needs to be said, needs to be remembered, because I get emails from, traders new to me, um, and they'll ask questions. And in trading, the only thing that really matters, the ultimate thing, is whether or not you're profitable. Because if you're not profitable and you keep trading, sooner or later you're going to run out of money. And I know that's obvious, but sometimes the obvious isn't seen, and sometimes the obvious is forgotten. It really is. And when we're, at our trading platform, whether it's phone, laptop, computer, whatever, we need to be thinking about that. Many times you'll read about, you focus on the process. And yes, that's true. But you also have to focus on the money, because you might say, well, price is going to get to so and so, and it just might get there. Problem is, usually when you say something like that, you don't put a second parameter on it. And it's like, price is going to get to X level, within the next hour. Because if it doesn't, what do you do? Do you stick it out? And that's something that we don't really talk about a lot. We really don't. But it's something to keep in mind, because once again, do you want to be right or do you want to be profitable? So for example, price ran up to what was this? 34.18 level. Now it's back down to 10. Well, when it crosses the double O, it's like I almost know it's going to come back, but the problem is when. And so we got down to 34.03 here. But we didn't get back to the double O. So you were within 3 pips of being right. Well, if you were short and you were up, let's say you shorted at 10, you were up 7 pips. Well, if you didn't take your pips and now all of a sudden you're back to 10, you're zero. And so the question is, do you want to be right or do you want to be profitable? And so if you were shooting for that double low, but it only gets to 3 and you're up 7, is it better to take the 7, or do you want to sit and wait to 3? Well, this is where I guess screen time comes in. This is where your skill comes in. This is where your trading plan comes in. Because, once again, let's just say you took a flip flop box here around 10, and then price went against you a little bit, and it came back, and it did this. Well, if you look left, you can see there was some congestion here, and some, sellers pushing it down, buyers pushing it up, and then it rocketed. Well, what's this? That's one of those return bars, as we like to call them, big bars, return bars. And you can see what happened around that open price. And then right here, you see all of a sudden things turn the other way. You get the, let me make this a little bit bigger here. See, you got the aqua colored dot right there. So the question is, you want to be right or profitable? And how long are you willing to wait to be right? And what do you give up in that time? So, coming down this far here, maybe you were in it for 3 minutes, 4 minutes. But, if you look at the price action, you had lower high, lower low, lower high, lower low, all of a sudden higher high, lower low, outside bar, lower high, higher low, inside bar. What's price action telling you? And so you can see right here, there's a flip-flop trade. It just was right there. Price shut down to like about the 02. There was a chance to pick up 3 or 4 pips. But do you want to be right knowing it's going to go to double O? Because chances are, you see this, I think this was the news candle right here. Yeah, it was a news candle. We got an open at like 33.91. Yeah, 33.91. So it's going to go back there, but how long? And so once again, he had a flip-flop box. Indicator 2 showing you want to be short. And you could take 4 pips. Oh, it just hit the double O. And there it goes right through the double O. But do you want to be right or profitable? That's the question. And so you can see here, just in the few minutes that, 7, 8 minutes of this video, I brought up the chart and we looked at it. You can see just taking these trades as they present themselves, but not being greedy, not trying to be right, but saying, hey, you know what? If every time I trade, I grab 2, 3, 4, 5 pips, that's not bad. And then somebody's going to counter, well, what happens when you're down 15, pips? It's like, well, wait a minute. Why are you down 15 pips? Is that where you put your stop loss at minus 20? And you're going to give back how many wins? I mean, that just doesn't make sense. But, I see traders talk like that all the time, and I'm not really sure if they're understanding trading. I mean, you got to have your risk and money management. That's number one. And number two, you have to have your method and your plan. Your method is part of your plan. You follow your method and you execute according to your entry signal. And on the exit side, you have your risk management in place, but you also have your price action and chart reading. And then the third thing is you, the trader, which is the most important thing. You gotta have your mind right. Part of it is whether or not you want to be right or profitable. I just have to laugh because see right here you had another flip-flop box. You're below indicator 2. But you can see this price action. And remember, you had this came down really quick. And when price comes down really quick, and once again, this is screen time, it usually wants to go back up to about that open. So right here, There's a taking that flip flop would be worth about 5 or 6 pips right now. It's just like, do you want to be greedy? Do you want to be bright? Do you want to be profitable? So when I talk about, these return bars and these other targets, those are what I call their targets, their target areas, their directional biases would probably be maybe even the best way to describe them. And so that's what I use them as. And once again, we were up over 5 pips taking that to the north. And to me, I'll take the 5 pips. And what happens next, Doesn't matter. It's one of those things you don't want to do the hairy hindsight and beat yourself up, because how you talk to yourself is going to affect what you do. So if you beat yourself up, oh, I should have done this, I should have done that, then what's going to happen is the next time you go to trade, you're going to second guess. You might miss your entry, or you might rush your entry as opposed to nailing the entry, and you get all discombobulated. And then you wind up in a losing situation. And so right here, like, once again, you saw this candle shoot up fast. The chances are it's going to probably try and get down to the open. So you had a flip-flop trade there at the 06. You're up almost 2 pips. We just wait to see what happens. Does it get down to that open? Not this time, not yet. And so looking left, what do you see? You see buyers winning, buyers winning, buyers winning. So it's going to be tough sledding. But can it happen? Of course it can. So indicator 2, price opened below it. And for those of you just tuning in, indicator 2 is basically the EMA 5 shown as dots or diamonds as opposed to squiggly line. And it just color codes it. If the price is above it, it's aqua. If it's below it, it's magenta. And then here's the same thing. Shows the distance away from the EMA 5. So you can see M5 is still pointing down. Now just switched over. Now it came back. And so we're right around that 3405 level. And we're almost out of time on this video. So I want you to really keep in mind when you're trading, what's the most important thing to you? Is it being right about what price is going to do, or is it being profitable, taking pips when you can? Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.